Hello, ladies and gentlemen. How are you? I hope you are doing fine wherever you are. I am the ACCA tutor, Mr. Jerome Chukulu, and in this video, we are going to do a rundown together uh, in relation to past ACCA Taxation UK uh, questions. Okay, we're going to look at those past exam questions where uh, the examiners tested people or students on this critical subject, okay, the UK taxation. So I guess you guys are ready for the toast as we term the taxation jungle. Okay, so without much ado, ladies and gentlemen, let us get straight to the business of the day. All right. Let me just do the housekeeping first. Where is my pen? Okay. Yes, the pen is there. It's writing. Good. What else? I'm sure I'm very, very audible, and you guys are not facing any challenges in terms of hearing what I'm trying to say or what I'm saying. Okay. One more thing. These questions are related to the section C part of the paper. All right. We're not going to do section A or section B style questions, but only section C. Most of the questions which are asked in section A are also related to the, to the materials that you are always going to be questioned upon in section C. So we are actually revising both sections, but in a different way. All right. So in section C, you will be required to use mostly the Excel, okay, Excel platform, or let me just say the spreadsheet platform. Okay, most of your answers are going to be input on the spreadsheet. Okay, although to some extent you might be using the word processor and so forth. But most of them would be on spreadsheet. All right, but in this particular video, I don't think I will use the spreadsheet for the purpose of time, and I want you guys to grasp the concept. Okay, there are other questions I will dedicate to be on the spreadsheet. Okay, maybe I will do one question so that you guys also get a feel of what it means or what it is uh, to, to do the workings or to present your solution on the spreadsheet. So I'll do that. I'll commit myself to do that for you guys. You laughed. Okay. So to those who are new, you now know how we do it. All right. We teach the ACCA qualification. All the modules are going to be are being taught by us. Okay. Um, the name of this person speaking. Okay. My name is Jerry. Okay. Jerry Mutumkulu. Okay. I'm a fellow of the ACCA and a holder of an MBA, and this is my number. It's also compliant with the WhatsApp. You can WhatsApp me anytime, any day. Okay. And or if you want to email me, you can just use that email address, and everything is super fast. Okay, so this is actually beneficial. This video is beneficial if you are actually going to attempt our practice questions. Okay, remember in week 2 we are talking of uh, income tax computations. Actually, computation. Okay, we want to exhibit how you are going to maneuver the terrain. How are you going to compute income tax? All right, income tax is that tax levied on individuals. All right, individuals. There was a video we dedicated to this week 2 lecture. Okay, you can as well refer to that video. Is also on this channel. All right, so when we are talking of individuals, we are looking at employees, We are looking at the self-employed people. Self-employed, okay, those sole traders. We are also looking at partners in a partnership. Okay, we're also looking at landlords. Okay, individuals who have got properties for rent. Okay, who are offering rental properties. Okay, so those are the individuals we are looking at. All right, so there is a way of presenting this. You need to group these incomes. Okay, we're also looking at individual investors. Okay, investors either in shares, sorry, in shares of limited companies, or uh, in financial institutions who earn something like bank interest. Okay, those are investors. Okay, so for those ones who are investing in shares of limited companies, the income they get is what is called uh, dividend income. And for those who are earning what is called bank interest, these ones get what is called savings income. And the rest of these individuals, the landlords, employees, self-employed, partners, the income they get, okay, the income they get is what is called non-savings income. I'm sorry, the screen is now, in clutter. Okay, but that's the snapshot of what we are talking about when we are talking of income tax computation in the UK. Okay, so you need to have a structured presentation showing the non-savings income, savings income, dividend income, and the total when you present, especially in section C. Okay, so we are going to do a first question to illustrate this so that you guys get up to the grips with these expectations. So here is the first question, ladies and gentlemen. Okay, I hope my picture is not disturbing you. All right, let me try to put it where it fits well. Okay, perfect. Now, there is question DOM. Okay, we have adjusted the years, okay, to ensure that the information becomes relevant to the current tax year. Okay, we are going to be tested from June to March 2026, from June 2025. Remember, from June 2025 to March 2026. So we'll be using this presentation will be actually relevant. All right, if you are intending to sit for the June 2025 ACCA Tax UK variant examination, this video is for you. All right, is perfectly for you. It's going to be very, very relevant. So we have modified the question. This was the past exam question. I think it's available on the ACCA website. It was tested around 2021. Okay, percent DOM. I think 2021 and so forth. It is also available in most of the revision kits. From approved platinum providers, and you will find the years would be maybe original, or sometimes they also modify the years to ensure that it becomes relevant. Otherwise, if you continue to use those years and so forth, yes, you then have to be very mindful to tell your mind that, okay, fine, I just have to use the current tax rates. Otherwise, uh, this is why I recommend that you need to first of all adjust the years to the current, and also to ensure that some of the items involved in that question are still relevant. Okay, for example, if you use a very, very old question, let's say from the 2009 era, where in those years income was actually stratified by age. Okay, so the tax rates were actually applied in terms of the age of the individual. Okay, was he below 50 or after 60 and so forth. So those, they were using ages, but now it's all about the income you have. Okay, it's now stratified in terms of the earning power of the individual. All right, so the tax rates only apply in terms of the earning power, not in terms of the age of the individual. All right, that's the taxation landscape in the UK for now. All right, so uh, we have done the work for you. Okay, so the years are actually relevant, and they are um, actually a replica of what you are going to see or to meet on exam day. All right, so on 31st July 2024, Dom left his employment with Abacus Limited, where he had worked since 2019. Dom started a new employment with Brass Limited on 1 August 2024. The following information is available in respect of Dom's employment in the tax year 2024 to 2025, which is the current tax year we are talking about. All right, but so far the examiner has actually spoken a lot of things which a very, very a well-coached, well-groomed ACCA taxation student should have deciphered from the beginning. Okay, so we are told that on the 31st of July, this guy left employment with what? With Abacus Limited. So we know that the UK tax year runs from 5 April, okay, to 6 April the next year. Okay, so if it runs from 5 April, let's say this guy left employment on 31st July 2024, so it means that uh, for the current tax year, we are saying that it started on 5 April 2024 and it is ending on, or it ended on the 6th April 2025. So it means this guy did not work for 7 months. We know that by 31 July, so this guy would have worked 7 months in an ordinary year, isn't it? But now this is a UK tax year, so the UK tax year starts in April. So from April to the 31st of July, that's 4 months. So he worked 4 months. Please get that right. Then from 1 August to 6 April 2025, 1 August 2024 to 6 April 2025, we are talking of 8 months. So these ones now, that's 8 months with Brass Limited. So when you come to Abacus, just tell yourself that, oh, this guy worked 4 months here, and here he worked 8 months. That will help you in your computation of the income tax. Otherwise, if you ignore these dates and just proceed blindly, you are going to fail, my friends. I'm very serious about that. You will fail. If you ignore those dates, you will fail tax. I bet with my salary, you are going to fail if you ignore those dates. Okay, now we have got that ground information. Let's now proceed. Employment with Abacus. Dom was paid a gross annual salary of 64,800 when employed by Abacus. So that's not a monthly salary, but it is the whole year's salary. But we now know that for this current tax year, he only worked for 4 months. Why am I interested in this? Okay, fine. uh, I'm sorry, there's been a video cutting. Okay, my recording time had been used up. I'm sorry for that. All right, so I was explaining to to a dead video. All right. Okay, continuing. Why am I saying that these months matter? All right. In the examination, when you enter into the exam hall and when you start to write or to read the question, once you have written, once you have read the first paragraph, you just have to go straight to the question requirement. So let us get straight to the question requirement. Okay, the question requirement is saying that we must compute DOM's income tax liability for the tax year 2024-2025. Okay, I'm sorry, I didn't take you to the question requirement, so you were not actually getting the context why I'm interested in such uh, a story or such an explanation or such a fact about the tax year and all these items, the months and so forth, the dates. When you are computing income tax liability for an individual, you must always ask yourself, what was the tax year? In which tax year are we required to compute those items? So here we are required to compute for the income tax liability for this individual for the year 2024-2025. All right. So that's the thing, ladies and gentlemen. So now, we are given, this one is an annual salary. Okay, it's an annual salary, which means when we do our computations, we are only going to take the 4/12 of this amount. Okay, of this amount as the salary of this guy related to Abacus Limited. Then we are also told that on 15 May 2024, Abacus Limited gave Dome a briefcase costing £100 as a reward for passing a professional examination. Okay, so that was a kind gesture of Abacus Limited to their employee. All right, he had passed an ACCA examination, for example. So, yeah, most employers do that. Okay, they do that. They give you a gift, a briefcase, or something in accolade, or even some gift box you are going to be given, something to ensure that you feel welcome, you feel important, and the mileage you have made so far is something that is worth of recognition. So they do that to ensure that they motivate their employees towards the right direction. However, you then have to ask yourself, okay, the gift, how much was it? Oh, it was £100. So anything above £50 to the taxman is something that is very significant that should be taxed. So this amount is going to be taxed. You need to add it to this guy's income so that it will be subjected to tax. Anything above £50 is not going to be considered trivial. All right, although this might be, maybe Abacus Limited might be a $1 million but a £1 million bottom line company. It doesn't matter. Okay, the £100, okay, in the eyes of the auditors could be, because in the auditing field we use materiality and so forth. So if you look at this £100 from an audit point of view, you are going to fail. Because you're going to just say, oh, this is just trivial, let me just put a zero and proceed. You're going to fail. So anything above £50 is significant in the eyes, is material in the eyes of the taxman. Get that right. So this one is going to be taxed, ladies and gentlemen. It is going to be taxed. All right. Be careful of this amount. It's taxed. Right. Then during the tax year 2024-2025, Dom drove 900 miles on Abacus Limited Kanban business using his private motor car. Private motor car, ladies and gentlemen. This one calls upon what is called mileage. Sorry, mileage allowance. Okay, you are using your own car for company business, then you should be entitled to mileage allowance. And the taxman has given you 45 pence. Okay, 45 pence per mile. 45 pence per mile. Okay, so Abacus, the company itself reimbursed this guy 35 pence. All right, so up to 45 pence, the taxman is not going to charge you up to 45 pence. Okay, so this guy was only given 35 pence. So, which means in the eyes of the taxman, he still has got some 10 pence at his advantage. So, 10 pence. He still have 10 pence at his advantage. So, 10 pence multiplied by 900 miles, that gives us 9,000 pence. 9,000 pence, ladies and gentlemen, is equal to 90 pounds. Okay, if you're in the dollar world, a pence, a pence, 1 pence, okay, is equivalent to 1 cent. Okay, the mathematical sense of it. Okay, the mathematical sense of it. 10 pence, that's 10 cents. All right, we're talking of 10 cents. Okay, get that right, ladies and gentlemen, because you will be confused. So, if we are saying 10 multiplied by 900, 10 pence multiplied by 900, it gives us, this is equivalent to 9,000 pence. And we are saying pence, you can say pence or cents, okay, in your computation, so that you won't be confused. Because most of the individuals taking the ACCA UK examination, some of them are not in the UK and so forth. So this pence thing end up confusing them. All right. So pence or cents, tell yourself it's cents, just cents. Okay. So we know that 100 cents is normally $1, isn't it? If you are in the dollar world. Okay. So if we divide this over 100, we must get 90, isn't it? Crossing out, and we are left with 90. Isn't it, ladies and gentlemen? Good. So tell yourself that, man, this cent, this pence, we're talking of cents. All right, we're talking of cents. All right, that's the mathematics of it. All right. But if you have been in the UK, you now know that you know it's arithmetically, you're just going to be correct in terms of the arithmetics involved. But you need to now know the taxation discipline. You now know, you should know where to get those figures tax-wise, because you might be having the mathematics on the one side, but not having the taxation grounding on the other. So you need to be able to marry the two. Okay, so we are done with the abacus part of it, the abacus employment. Let us now move to the brass limited employment. But in the examination, there won't be time for you to do all these. So you must get straight to your spreadsheet and then open the table, which I find to be very, very useful, where you would just have to be slotting in all this information as you'll be proceeding with your computations. As you'll be proceeding with the reading of the question, because there won't be such time where you'll be going, back and forth doing all this. You might be running out of time. So let us get to the drawing board. and see if we can come up with a table. So ladies and gentlemen, like I said, this is a very essential pro forma you need, guys, to have. All right, in the examination, no need to draw all these things. Okay, you do the formatting after the examination. Sorry, what's happening to my screen? I'm sorry for that. The screen is misbehaving. Okay, I'll try to exercise caution. So I'll be doing the drawings. So first of all, we will start with what is called non-savings income. Then savings income, dividends income. Then we get the total. Okay, that's what we are going to be doing. All right. So if we come to the question, we are told that Dom with Abacus was earning 64,800, but we know that during this this time he only worked for 4 months at this company. So that's 64,800. So we come here and say salary. That's 64,800 multiplied by 4/12. All right, we should multiply that figure by 4/12. Okay, let me use my calculator here. 64,800 multiplied by 4/12. That gives me 21,600. Okay, yes. Then I come to the next information there on number 2. On 15 May 2024, Abacus Limited gave a briefcase worth £100. So we said that should be taxed. So I come here and say briefcase gift. Okay. If you want to be, to show them that you know what you are doing, you can just say above £50. Above £50. So if it is above £50, you're not going to be tempted to say 100 minus 50, we are only going to tax the extra. No, the moment the gift gets above £50, we tax everything. We tax the complete value, not the tapering. You just have to just tax the whole amount. Okay, so that's 100. We're going to tax that, the complete value. Then this guy drove 900 miles, okay, on company business using his motor vehicle, his own car. So he should be entitled to mileage allowance. So in the examination, the tax rates tables are going to have this this rating of 45 pence and so forth. All right, let me just show you where you are going to get them. Okay, on the CBE environment, there is a portion for those tax rates, but I'm not going to show you the CBE environment at the moment. I'm using the tax rates as provided. The tax rates are also downloadable on this modules website, on the ACCA Taxation UK website. You can download them for free. All right, so I've downloaded them. I want to show you the soft copy of that. All right, so just wait me 1 minute. Okay, ladies and gentlemen, you are going to get this information. Okay, this is the tax tables for the UK. So That's the information you are going to get. So we'll be using this information very frequently as we do these presentations. So there you go. The approved mileage allowance for this tax year. All right. So if you travel up to 10,000 miles using your own car for company business, you are entitled to 45 pence. Right? But any extra mileage above 10,000 miles will then entitle you to only 25 pence. To the taxman, this employee would have traveled really indeed. All right. So any extra mileage won't be attracting the 45 pence, but it will be reduced. So let's say in the examination you are told that this guy traveled 12,000 miles. You need to ensure that you grant them the first 10,000 miles at 45 pence and then the remainder at 25 pence. Okay, do not say that because he traveled 12,000 miles, so therefore everything is only entitled to 25 pence. No, it doesn't work like that. Okay, so this is why I said having mathematics is one thing, but knowing taxation is another. All right, so let us proceed with our computation. We are now on the same ground. All right, so proceeding. All right, so we are saying that this guy is entitled to 90 pounds, right? And how did we get the 90 pounds? We tell the examiner, all right, we need to show the examiner that there is been a mileage, right? Uh, mileage. Uh, benefit, or let me just say mileage allowance. Okay, what is the eraser? Okay, better. Mileage allowance. Okay, mileage allowance claim, right? We are saying he traveled 900 miles. Okay, multiply by or 45 pence, let minus 35 pence, right? And this should give us 90, but this 90 is negative. Why is it negative? Because we are saying this guy is entitled by the taxman to 45 pounds, but instead of gaining, the employer should have rebased me 45 pounds, and if they had rebased me 45 pounds, okay, I was going to have to put a zero there because the taxman allows me to deduct up to 45 pounds. But in this case, I was reimbursed 35 pence. The enjoyment I got is only 35 pence instead of 45 pence. So in this case, the extra 10 I was not given. The 10 pence deficit should be at my advantage in the tax sense. All right. So my tax should be reduced by the amount I was not given. All right, of 10 pence. So 10 pence per mile multiplied by 900 miles gives me 90 pounds. Are we together, ladies and gentlemen? Good. So this should be totaled now. I think we have finished everything for this. Yes, we have finished everything for the employment from Abacus. Okay. So I think we are done for Abacus. But is there any need for us to underline? Of course, you can underline if you want to, to show the examiner that this is from Abacus. So Abacus, employment income. All right, you total up, yes, but it's not going to award you any mark for that. All right, but it shows that you want your, the examiner to easily see where you are coming from. Or the other thing you could have done, or we could have done, is instead of underlining, we can simply state at the beginning that this is from Abacus Limited. Abacus Limited. All right, so that the examiner knows. Here, when we now move on to Brass Limited, we just have to indicate clearly that the income we are talking about right now is from Brass Limited. So we start again with the salary. This guy worked with Abacus Limited from 1 August 2024. So 1 August 2024, but his annual employment, salary was 76,800. All right. He worked for 8 months from 1 August. Let us count together. August is 1, September 2, October 3, November 4, December 5, January 6, February 7, March 8, and the year has ended. The tax year, the UK tax year, would have ended. Are we together, ladies and gentlemen? So this is why I said 8 months. But in the examination, do not make that noise. You'll be just counting in your heart. All right. So that's the salary. We are saying 70. I've forgotten the figure again. 76,800 multiplied by 8 over 12. Let us use our calculators, because you can't do it using mental work. All right, 76,800 multiplied by 8 over 12. That's 51,200. 51,200. Ladies and gentlemen, we are still in the column of non-savings income. Okay, then we go to the note 2 under Brass Limited. On 1st September, he was provided with a new diesel-powered company motor car. The motor car has a list price of 25,200 and an official CO2 emission rate of 117 grams per kilometer. The motor car does not meet the real driving emissions to the RDE2 standard. Okay, so in the UK, they are serious about the green gospel, the going green gospel. So the taxman would expect your vehicle to be compliant with the real driving emissions rules or standards. So this car was not compliant. So if it was not compliant, then there is a 4% surcharge. Okay, always note that if the car is not RDE compliant, RDE2 compliant, then there is a 4% surcharge. All right, so whatever percentage you have obtained, you need to add the 4% up to the maximum of 37%. So if this is a waste car, then the 37% should be the maximum charge. The taxman has put a cap such that, oh, you will end up killing people. So they say that it should be up to 37%. All right. So one thing you need to understand here is that there is a company benefit when the company gives you a company car. Oh, sorry, please let me adjust my picture. Sometimes I forget, and you guys won't be seeing the screen properly. Okay. All right. I've been explaining. I was actually explaining the aspect of the car benefit or motor vehicle benefit an employee would enjoy if the company gives him a motor car or a vehicle. So you then have to be guided by the tax tables on how you are going to compute the monetary value of that benefit. All right. So for a company car, you then have to use the list price of that car and adjust it in relation to its CO2 emissions so that you arrive at the appropriate percentage. Okay, in the notes, we explained that very clearly. So here, for example, we are going to say list price. Okay, like I said, in the examination, you won't be having time to, uh, you know, scribble or on the scratch pad and then start to complete the question. So you can do the computations in the pro forma diagram or table I have presented on the screen. So we come here and say, okay, car benefit. The car benefit, the list price of the vehicle was 25,200, 25,200 pounds. Okay, these are pounds. All right, so we multiply this by the appropriate percentage. So what is the appropriate percentage? You can do an extra working for the appropriate percentage, but it's very simple. Okay, let's say I hope let me just underline here and say this one's workings starting from here. So we can say working number one, car benefit percentage. Okay, car benefit percentage. The examiner would be happy to see your workings. So from the text table, they say up to from 51 to 54 grams per kilometer. It's a 15%. Okay, but if it is 55 grams per kilo, they say it's 16%. Okay, verify from the text tables. I don't want to go back to them for now because the time. Okay, somebody saying that let us get back there to see. All right, so let me just keep this for now here. And the text tables, where are you? Text tables. Okay, I guess these are the text tables. All right. So all right, so these are the car benefit percentages. Car benefit percentages. So we are saying this is what I was saying. Okay, from 51 grams to 54 grams, we charge 15%. Okay, then at 55 grams per kilo, that's 16. And this 55 grams has been considered the best level. Okay, so in our question, we have been told that this car is emitting 117 grams per kilometer. Okay, so which means the car benefit should be 117 minus the base level of 55. All right, divided by 5. We need to divide this figure by 5. All right. So before you divide, get the difference. 117 minus 55, that should be okay, 170 minus 55, that's 62. Okay, so it's 62, right? But to use 62, when you are going to divide by 5, obviously your answer is going to have some decimals and so forth. So the taxman allows you to round the 62 down to 60, right? So that's equal to 60 over 5. Are we together? And you get what? What do you get there? That's 12. So these are in percentage. It's 12%. All right. Remember, every 5 grams per kilo, every 5 grams, every additional 5 grams from the base level 55 grams, every additional 5 grams is attracting a 1%. So here we found 12 yes, we found 12%, right? Which was a product of actually a quotient, right? Because we are dividing. So it was a quotient of 60 grams, because 60 grams have been extra grams. Okay, and we are saying in these extra grams, every 5 gram will attract a single percent. So that's 60 over 5 attracts a total of 12%. Are we together, ladies and gentlemen? So we are going to add this 12% to the base. Remember, we said that 55 grams constitute 16%. So we are going to say 16% plus 12%. And this gives us 28%. But this car, because it was not compliant with the RDE2, there should be a surcharge of 4%. Don't forget that. So the appropriate percent becomes 32%. Excuse me. Okay, so the appropriate percent for this question is 32%. So we get back to our workings. All right. So we are saying that okay, I've explained all these things. I should have been writing them here, but don't worry. I'm sure you got all the information you needed. Okay, my screen is now refusing to be, annotated. Doesn't matter. We can proceed as it is. Okay, so we come here and say, okay, 16% plus. So this was just for illustration. So 16% plus the additional percentage, which we say that it was 60 over, sorry, over 5, not over 12. Okay. So that's 16 over 5. All right. This gives us how much? It gives us 12, right? 12%. All right. Then plus the 4% surcharge, and we arrive at 32%. So that's the car benefit percentage. So we come back here and say plus 32. Multiply by 32%. You can say in bracket working number 1, so that the examiner sees where you obtained the 32%. All right, and then you then have to time apportion this amount, because he did not enjoy the benefit for the full year. All right, so the question is saying that he obtained this motor vehicle on 1 September 2024. All right, so that's how many months are we talking about from 1 September 2024? Remember, he entered into employment on 1 August, and we said that from 1 August to 31st March, the end of the year, of the tax year, that's 8 months. So from 1 September, obviously it will be 7 months. So he enjoyed the motor vehicle benefit for 7 months. So 7 over 12. Okay, so let us then do the computations using the calculators. Okay, if it is in Excel, it's very, very simple. All right. So that's 25,200 multiplied by 32% multiplied by 7 over 12. That should be 4,704. Please verify with your own calculators. 4,704 pounds. All right. You read the question again to see. Usually, the motor vehicle benefit is associated with the fuel benefit. But the fuel benefit now, the fuel benefit has to be supported by the evidence that this employee was also enjoying some private journeys. Okay, when you are computing the fuel benefit, then you need to ask yourself, was this guy doing some private errands on the fuel? Was he giving some private fuel? I mean, fuel for private journeys. So let us read the note number 3. I mean, the additional information number 3. Dom was provided with fuel for private use in respect of this motor car from 1 September. Oh, so that's from 1 September again. So that's 7 months again to 15 April. So we are having some information we can put in our answer. So we can say fuel benefit. Fuel benefit. The information we have is that we are having 7 months, 7 over 12, multiplied by the percentage we are going to use is the percentage for the benefit, for the car benefit. These percentages should be the same. The percentages should be the same. That's one way examiners are going to determine if you have covered the whole tax syllabus. Otherwise, if you use the wrong percentage, they will see that, oh, this guy is just a gate crasher, is a chancer. So such, disturbing errors, or let me just say, they're actually crazy errors, which if you do them or if you show them to the examiners, they are likely to give you a 40-80%, even if you're mastering the concepts very well, but it annoys them that you are not seeing that. Why? They will be asking themselves, why did he fail to understand that the fuel benefit percentage should be equivalent to the benefit, the percentage of, to the percentage benefit, to the percentage of the benefit of the car benefit. Okay, so if these percentages differ, it annoys examiners. Please get that right. It annoys them. Also, don't forget to put the pounds like what the tutor had done. I had failed. That one again is a symptom for disaster. All right, it's something that is going to affect you. So do not forget to put those monetary, symbols there, because we are doing UK taxation. So please, 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 please do not forget to put the pound sign, the pound sterling sign there. Okay, now the other question now examiners would be interested to see is the amount you are going. Are we going to put the same amount for the car benefit? This one was actually the list price, but here we are not going to put the list price. The amount you are going to put there is given by the examiner on the text tables. Please, that one you need not to worry about it. Let us go to the text table. Okay, so we are on the text tables, ladies and gentlemen, and we can see on the screen that the benefit, the best figure for calculating car fuel. So the figure is 27,800. So the examiner has done that working for you. All right. You just take that figure and slot it in your formula. So we are having our formula ready there, and the figure, please do not forget the figure. The figure is 27,800. Okay, so we slot in that figure 27. Yes. What's happening? Okay, all right, that's 27,800. But I must use a black pen. Okay, so let me use my calculator here. 7 over 12 multiplied by 32% multiplied by 27,800. That gives me 5,189. Okay, good. So let's move on. If there is other information to adjust with. So Brass Limited has a workplace nursery on its premises, which is available to all employees, and Dom's child took up a place there on 1 January 2025. Dom does not pay anything in respect of this nursery place, although the nursery fee is payable by members of the public for any available places are £700. So, this guy is, this company, Brass Limited, is actually a a partaker. Yes, is a partaker of this wellness exercise, or maybe actually the 21st century workplace, where we are saying employers try by all means to ensure that their employees have got are enjoying or are well engaged in terms of doing their work. They are valued. They are motivated. They want to make the workplace a better place to stay. So employees bring their kids to the nursery. They've got a kindergarten, place for kids, for their employees. But members of the public also have got access, but they pay when they want to enjoy that. Right? So employees bring their kids, they are taken care of, and so forth. So it is actually a 21st century workplace, right? They want to make, to make their employees feel, like this is the best company ever. So, in the eyes of the taxman, if that enjoyment is accessible to all employees, or is available to all employees, then we cannot tax Dom if his kid or her kid is accessing that benefit. So it is not going to be a taxable benefit in the hands of Dom. Are we together? So we come here and say necessary, okay, necessary benefits. In brackets, you can just say exempt. Why? Because available to all employees. But you must put the zero there. If you don't put the zero, you're not going to earn that mark. Be it a half mark. Remember, some half marker will enable you to cross over. So if you just ignore and say, this is zero, so let me just go and do something that has got some value there, you are going to get a 0. So there you need to put that. Let's check if there is other information to adjust our table with. There is number 5. Number 5. During the tax year 2024-25, John paid £300 to renew his membership of a professional body. So this guy is a compliant person or student of a professional body. Is very compliant. He renews his annual membership. Maybe he was an ACCA student then, or in a member of another professional body. He is actually somebody who is complying with the ethics of the profession, where you need to, to be professional. Okay, some professional behavior, some professional competence in UK. You need to ensure that you are up to date with your subscriptions and so forth. So the subscription were also relevant to his employment. So in the eyes of the taxman, because they were relevant, okay, we are going to allow a deduction. All right, so it's tax allowable. Such type of subscriptions are tax allowable. So we come here and say professional subs, professional subscription 300. These ones are allowable. Okay, so we then have to rule off and do the summing. Okay, I think we need to use the all right, let me just punch in the figures. 21,600 100 minus 90, that's okay, plus 51,200 plus 4704 plus 5189, 0 minus 300. So we get 82,403, but my screen doesn't allow me that. So we just continue our lines down there. Let's continue with our lines. All right, so we are going to get what is called employment income. The employment income for John, that's 82,400. 82,403. Okay, that's the employment income, ladies and gentlemen. But remember, we also have got other incomes this guy received. Okay, he also received, because there are some other income there. So during the tax year, he received £700 of savings income. So we just come here and say savings income £700. Remember, that's the column for the savings income. And also he received some dividend. Okay, dividend income of £3,000. Dividends £3,000. Okay, let us now total up. But somebody says, oh, there is still another information there, which was another income. Number 2, during this same year, John made a charitable gift aid donation. So you make a donation which is charitable, okay, but the examiner is saying that that's an income for you. Yes, you have made a donation. There was an outflow on your part, but that was also income on your part. All right. So this type of income, this income has a tax advantage. Why? Because it has got a tendency of extending. Okay, it extends the tax bracket. It extends the tax bracket. As you see, I'll show you how it extends. Let's say if you're a basic rate taxpayer, it is likely to extend that basic rate bracket. Okay, whatever extra income on top of the basic payer rate, you are going to be charged the basic at the basic rate instead of the uh, relevant percentage of that income. Even if it is now, let's say, in the higher rate, you will be continuing to charge that income in terms of the basic rate percentage of 20%. So what it means is that this 240 has to be grossed. It has to be grossed up. How do we gross it up? We gross it up by subjecting it to 100 over 80. So we multiply by the figure of 240. Okay, this is the 240 we're talking about. So if we multiply 100 over 80 by 240, let us say it comes to 300. So of your income, the 300 of your income is going to be charged at 20%. Okay, so if say all right, this is just an example, we are not using the figures from the question. If say your income was 40,000 pounds, we know that the first 37,700 is has to be charged at 20%, and the remainder 2,300, because the income is 40,000, so the balance is 2,300, has to be charged at 40%. But we are simply saying, because you made a contribution to the charity, so we are going to say 37,700 plus 300. Okay, this 300 is going to be added there, and we are going to subject this at 20%. Then the remainder is now 2,000, because your income in total is 40,000. So the remainder now is now 2,000. Why? Because the 300, this 300 has been eaten by, has been taken or absorbed by the basic rate, by the basic taxpayer rate of 20%. So only 2,000 is now going to be subjected to 40%. So there is a tax advantage in making these donations to charity. Okay, that's it for now, ladies and gentlemen. So using this background or using this information, I would want you to then see how it fits into this particular question. So let's proceed with our table. Now we have put all the incomes. Please do not make a mistake of deducting these donations directly from the salary. There is no way, as you can see, we are not going to deduct them directly from the salaries or these incomes. They are not going to be done. Yes, it happens. It is done in other tax jurisdictions, but not in the UK. But not in the UK. In the UK, those donations only assist you in gaining an indirect tax advantage. Okay, are we together, ladies and gentlemen? Oh yeah, that's the difference between mathematics and tax. All right, so let's proceed, ladies and gentlemen. There's going to be a problem. The screen is not going to accommodate everything there, but let me see. Let me see if we can do it. Okay, so let us total up and see what we get. 82403, 700, 3000. Okay, remember the total column should have been uh, completed. Otherwise, if we do not complete it, we are not going to get or to earn the marks we need. But in the examination, because of time pressure, there is no need for you to put all these totals there. The only total that is relevant for now maybe is this wholesome total for the employment income. Just put the total there, 82403, and then 700, and then 3000. These are the totals which are very important. Okay, let's total up 82 plus 400, 82,403 plus 700 plus 3000. That's 86,103. Okay, now you might have been wrong in arriving at some of these figures, but to some extent, examiners might might have lenience on you. Okay, if you know how to play around with these figures. All right. By playing around, I'm not saying you need to do some creative accounting, but I'm saying if you stick to your guts, if you stick to your beliefs that you are correct, if you could show the examiners that you believe that you are correct, you're not going to be penalized. All right, you are likely not to be penalized. Why am I saying so? Because you need to show the examiners that you are believing, you are knowing what you're doing. Okay, you just made an error, but you are knowing. Yeah, you're actually ready to pass this paper. All right. What am I saying? All right. Now, this is the income. Okay, the total income for this guy. Okay, total income. All right. But now, there is what is called personal allowance. Personal allowance. So the total income is very important to give you the right, in giving you the right to the personal allowance. So if you're looking at these figures there, we can safely see that though is a high, actually a higher rate, is a higher rate taxpayer. Why? Because his income is above the basic band of 37,000, of 1 to 37,700 pounds, but below the additional rate of, or the additional band of 37,700 to 125. Actually, he is within this band. Okay, he is within this band of 37,700 and 125,140. So he is within that that band, which is for the higher rate taxpayer, and their rate is 40%. Okay, why? Because his income, the total income, is 86,103. So, being a higher rate taxpayer, all right, or not really, not only that, his income is also below the £100,000 threshold. Okay, he is, the income is below the £100,000 threshold. So, he is entitled to the 12,570, which is given to all income earners whose total income is below 100,000. Okay, the income is below 100,000. So we give him the full allowance. But if his income is above 100,000, the personal allowance will be affected. How is it going to be affected? It is going to be affected by the 50% of the difference between that amount above 100,000. Okay, if it is, let's say, 105,000 minus the 100,000. This means this will be 50% multiplied by 5,000, and we'll get 2,500. Sorry, 2,500. There are two zeros there. All right. So it means the personal allowance will be reduced by 2,500. But in this case, we are very lucky. There is no need to do that computation. Are we together, ladies and gentlemen? There is no need for us to do that computation. So what happens? We simply deduct the personal allowance. Is there a cap? Is there a cap that when you reach this particular band, you are not going to be entitled to the personal allowance? Yes. If you are a high rate, an additional rate taxpayer. An additional rate taxpayer is when your income is 125,141 plus. So if you are an additional rate taxpayer, then it means you are not going to get the personal allowance. The personal allowance would have gone down to zero. It will go down technically. We can show it how it goes down. All right. Let's say your income is 130. So 130,000 minus 100,000. It means there is 30,000. Okay, there is what? 30,000. And if we subject to 50%, we can see that there is 15,000. All right, but the taxman has only allowed a maximum of 12,570. So you automatically you can see that this is above. This is actually greater than 12,570. So you are not going to get anything. Okay. So the exact amount that gives you that will give you a zero in terms of computation is when your income arrives at 125,140. Okay, which is that's the boundary for the higher rate taxpayers. Okay, if your income is exactly 125,140, then it means your personal allowance will be zero. How? Because we are saying if we subtract 100,000 multiply by 50%, we are going to get let me see. Okay, 100, 125, 140 minus 100,000. That's 25,140 multiplied by 50%. That's exactly 12,570, which is the annual percent. So if you subtract this one from this total, you are going to get a zero because that's the maximum personal allowance that is allowable in the UK. So In the examination, you might be asked um, at what income level, all right, is the taxpayer likely to get a zero personal allowance? So all incomes which are equal to or above 125,140 are going to get a zero personal allowance. All right. So in the multiple choice, they're gonna say all incomes which are or above 125 is A, or all income above this figure is B. So you're likely to be confused. I have shown you that all incomes which are or above, all right? So all incomes which are or above, that's A is the sign of my A should be greater than or equal to 125,140. Greater than or equal to. That's the income that is going to give you a zero in the eyes of the taxman. All right, in the eyes of, that's the difference between mathematics and tax. Okay, in the eyes of the taxman. All right, if you have got an income above 125,140, you're going to get a zero personal allowance. If you have got an income which is equal to 125,140, you're going to also to get a zero there. Is that clear? So this was not necessary for this question, but I'm trying to explain the concepts so that we are on the same page as we proceed with the lecture. All right. I know some people complain that you explain too much, so that no, we lose interest and so forth. Yes, lose interest and jump into the examination and fail, because these are the opportunities you would be having to interact with me through listening these explanations. Is that clear, ladies and gentlemen? All right, so let me finish the computations. Let me clean up the board. I'm pausing the video. Okay, so let us total up, ladies and gentlemen. Let's total up workings. We are saying we need to get the totals correct there. So 82,403. Let me check my calculator here. Minus 12,570. We are going to get a taxable income of 69833. Okay, and this one, the 700 comes as it is. 30,000 comes down as it is. And what is the ultimate total? Let us use our calculators again. 69,833 plus 700 plus 3,000. This should give us 73,533. Don't forget to put this to that 12,570 in the outer column there. Good. Now we have determined the taxable income. Let us now calculate the tax. Okay, good. So you should come here and say income tax. Okay, the income tax is calculated systematically, ladies and gentlemen, and in the exam you won't be having time. So you need to follow the sequence from non-savings income to savings income, then dividend income. That should be the sequence of events. So we are going to start with non-savings income. So the non-savings income, ladies and gentlemen, is subject to tax brackets. Okay, is subject to tax brackets. All right, but all right. So there is this important working we did about grossing up the charitable donation. All right, so we need to determine the basic rate amount. From the tables, we know that any income from £1 to £37,700 is going to be charged at 20%. And then we move to the 40% bracket and so forth. So we know that this guy's non-savings income, the non-savings income of this guy was this amount, 69,000. It was 69,833. Okay, so we should be guided accordingly. Okay, the 69,833. Is that so? Let me see. Yes, 833. That's fine. So that's the total we are looking at. Okay, but we know that in this 69,833, the 37,700 is the basic rate. So the basic rate originally, is the basic income, which is charged at 20%. So 37,700. But we need to add the amount that was contributed to the charity. So this has to be grossed up if it is given in the question as a net figure. In this case, it was net. So we need to get the gross amount. So the gross amount is 240 multiplied by 100 over 80. We did this computation and we obtained a 300. We now know that this gives us it adds up to 37,700 plus 300. That's 38,000. 38,000 pounds, and this has to be taxed at 20%, which is the basic rate for the basic taxpayers. Okay, that's the rate for basic rate taxpayers. Okay, so what do we get if we punch the figures there? Because that's now the tax component, and it's very, very, very important. So let us use the calculators. That's 7,600 pounds. All right, then we move on. We are still there because the amount we need to exhaust is how much? 69,833. So what is the balance? The balance, remember, we are still, okay, we have exhausted the basic rate, but we haven't finished the amount. So we have to go to the other tax band. All right, let me show you these tax bands so that I won't confuse you. All right, the tax bands are given, ladies and gentlemen. You need not to memorize this. They're going to be given in the exam. All right, so this is the income tax computations table. Income tax. All right, so we are saying we have exhausted this first band. We've exhausted that one. All right, but we are not yet done. All right, there is more work to be done. There's still work to be done. So since we have exhausted the first band, we are now going into the higher rate tax brackets. So we are going to charge 40%. Okay, I'm sorry, there is other information that is popping up. It's not necessary. Something that has to do with the technicality of the Microsoft Edge software. Okay, so so now we are now in the 40% bracket because the 20% has been exhausted. So we are moving into the 40% bracket. So we come back to our drawing board, to the drawing board, and say the balance, because the amount we want to tax, the total amount should be this amount, 69,833. But only 38,000 has been taken, or has been taken care of. So the balance is how much? What is the balance? The balancing figure, that's what we need for the non-savings income. So we are going to say 69,833 minus 38,000. This gives us 31,833. Okay, pounds. And this is now taxed at 40%. So if we multiply 40% to that figure, we are going to get 12,733. Okay, so that's income from non-savings. Now let's move on to the savings income, because I said you start from the non-savings, then savings, and then dividend income. So savings income. If you label your workings, your presentations clearly like this, you are going to earn as many marks as possible. Now, the savings income, all right, savings income. The examiner allows us, if we are base grade taxpayers, we are entitled to 1,000 0 percentage rate. But we are not, in this case, Dom is not a base grade taxpayer. We have already identified that he is. We have already identified that he is a higher rate taxpayer. So he is entitled to £500. How do I know that? We consult the tax tables again. So if we go back to the tax tables, and say, tax tables, how shall we proceed? So in this case, the tax tables are saying savings income, new rate band. If we were a basic taxpayer, we were entitled to £1,000. But because we are a higher rate taxpayer, we are entitled to only £500. So the first one is not going to be applicable. Why? Because Dom is not a basic rate taxpayer, but he is a higher rate taxpayer. Are we together, ladies and gentlemen? Good. What about if Dom was an additional rate? The additional rate is this one, where we charge 45%. Now, if he was an additional rate taxpayer, it means he was not going to get anything. He was only going to get a 0 there. And the examiner is not going to give you any mark because it's not necessary. That one is not necessary to show. Okay, so that's the thing. Now we are best grade, we are higher rate taxpayers, so we are going to use the 40% charge. We are going to we are going to use the 500 benefit. Okay, that one is going to be is needed by the examiner if you want to get a mark. So we come here and say, okay, let me use another pen color here. Let me use the red. Okay, it's very essential to indicate the amount you want to tax. This time we want to tax the savings income. What is the total savings income we are looking at? We are looking at £700. So we come here and put the £700 just in case, because you need to cross-check your figures as you proceed. Otherwise, if you just proceed randomly, you're going to to apply figures on wrong with the wrong okay. All right, so let me use a black pen. So the savings income, the total savings income we are going to tax this time is £700. We have taken that from the savings column. This is the savings income column. All right, so we are allowed to deduct £500. So we say first £500 is taxed at 0%. So the total tax there is a 0. All right, remember these items are going to be added to get the total tax. Right, so they should be in the same column. The ultimate amount should be in the same column. So we have already taken out the 500 at 0. So what is the balance? Remember, the figure we are taxing is 700. So we are going to say 200 this time. Why? Because the total is 700. All right, so we are simply following what we did there. All right, so the 200, at what rate is the 200 taxed? Is it taxed at 20%? Is it taxed at 40%? Do we use mathematics or psychology to determine this percentage? What do we use? Okay, let us please, I'm busy, please. Okay, we have already exhausted the basic rate tax band. Okay, it had been extended by the donations. Okay, the donations to charity had extended the basic tax tax band, or the basic rate tax bracket has been extended by £300, which was linked to the donations, and we have exhausted that bracket, and we were now at 40%. All right, the income which was last taxed was taxed at 40%. So obviously, all the other incomes are now at the 40%, at the higher rate tax band. So we are going to use the 40%. All right, and this should give us something like 80 pounds. All right, then we still have another income called dividend income. How much is the dividend income we are looking at? Our computations should tell us. Okay, please, at this level, even if you were wrong, just now use the figures from your table. The examiners will understand that. Okay, just use the figures from your table. If you have been wrong on top there, it doesn't matter. But now use those wrong figures. They are going to earn you the mark. Usually, they do not penalize you twice. All right, so make sure that you stick to your figures now. You stick to your figures. So the dividend income total is £3,000. Okay, and we are allowed to deduct the first £500. Please check the tables for this information. Okay, because of time, the video is now too long. We can't do the back and forth thing. Just check the tables to cross check. So the first £500 is going to be at 0%. Okay, and that 0 is required. And then what is the balance? The balance is now 2,500, because that's 3,000 minus 500. Remember, the total is 3,000 here. Okay, that's the total. So the 2,500 is going to be taxed at, now we have been using the rates which were applicable to the non-savings income and dividend, the savings income. They just follow the same rates. But now for the dividend income, all right, here I'm now being forced to go back to the tax tables. All right, forgive me for that. Why? Because there is a very important thing I want you to see. Okay, so I'm going back to the tax tables. So we are on the tax tables, ladies and gentlemen. Now, for dividends, the dividend new rate is 500. We have done that correctly. But when it comes to rates now, these rates are applicable to both the non-savings income and savings income. But for dividends only, for dividends, we need to use those rates. But we just have to apply the rates as indicated or in line with that categorization, the basic rate, higher rate, additional rate. Now we are in the basic rate. We are in the higher rate. Okay, because we've already identified that due to his income, Dom is a higher rate taxpayer. So being a higher rate taxpayer, we are going to apply the relevant rate of 33.75% on his dividends. So that's what I wanted to point out. So 33.75, that's the rate we are using. 33.75. So that's 844. So what is the total taxable income? So we are going to add all these figures. Okay, these figures are going to be added. So from 7,600 to 844. Let us add those figures. 7,600 plus 12,733. All these are in pounds, ladies and gentlemen. These are in pounds, in pounds, in pounds. So we get 21,257. Okay, so we have taken much time just because we wanted you guys to get all the information you need in doing this computation. So this is our tax liability. Tax liability. Okay. 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 We have done part 1, 12 marks, and now we are left with these other parts. We need to calculate on part B. We need to calculate the total amount of employee class 1 national insurance contributions that DOMO will suffer in respect of the tax year. So we need to know what class 1 NICs are. Okay, the class 1 NICs are payable by the employee as well as the employer. Okay, so employers contribute them on behalf of their employees. This is normally happens in many jurisdictions, especially in Zimbabwe. Also, there is what is called NASA contributions. They are contributed by the employee himself as well as the employer, just do the same contribution. So the class ones are for cash benefits. Cash benefits. So the salaries, all cash that has been given to the employee is subjected to class 1 NIC. Right? There is also what is called class 1, class 1A. Class 1A is for non-cash benefits. Those company cars, briefcases, those rewards which have been given to employees and so forth, they are under class 1. All right. So employees suffer class 1 only. Class 1 only. Okay. But employers, they do suffer the class 1 as well as class 1A for their employees. Okay, so in this case, we need to compute the class 1 NICs, which this guy would have suffered. So will be led by his income. His income will tell us where to touch. All right. So let us get to his incomes. Okay. Okay. So if we look at this screen, all right, we are going to get the information about employment income, savings, and so forth. But we can safely see that from this, we are not going to be able to determine what cash benefits did this employee uh, get from the employer. Okay, so we have to go back to our pro forma and see which ones were cash benefits. All right. So the first cash benefit I'm seeing there is the salary, isn't it? So the salary. All right. The other benefit was a briefcase gift. This one was non-cash. This one is not a cash benefit. And mileage allowance. This one again is non-cash. Um, then salary. Yes, the salary is the cash benefit. The car benefit is not a cash benefit. Fuel benefit. Um, here, um, this is an abstract figure. The taxpayer simply assumes that that's the maximum benefit of in terms of fuel an employee can enjoy, but it wasn't any. It wasn't contributed or given to him by the employee. It was the taxpayers, the taxman, the tax authority, best figure for the fuel enjoyment, right? So the necessary, again, this one is not cash benefits. Professional subscriptions, this was not actually a benefit. It was an expense he incurred. It was an outflow of cash from his pocket. So there are only two cash benefits there, which were given to the employee. So we then have to deduct some NICs relating to those cash benefits, which he was given. So you just do a rough sketch. You can do a rough sketch and say, okay, fine. What was the total of this? Because it will help you somewhat. So the total there is, let me use my calculator. Um, that's 21,600. What's happening? Okay, plus 51. 51,200. That's 72. 800. It's a good figure. We'll use it somewhere. Something that is good. All right. So that's our rough sketch. We now have an idea of the figure we are looking at. Okay, it's very important. Why? Because uh, what happens is we are also going to use text tables in the computation of NICs. Let me show you the text tables where you find this information about computing the NICs. So if we come to the text table, where are the tables? Okay. Okay, ladies and gentlemen, these are the text tables, and we're looking at the national insurance contributions. These are the NICs we are talking about, the NICs. So, we are told that for class one, the employee contributions, the first 12,570 of his income is not charged any NIC. Okay, it's not charged any NIC. So, we start from the income between 12,571 and 50,270 pounds per year, and we charge 8% on that income. All right. So what you need to do is, in computing the NICs, all right, we have already determined that his income is above this bracket. Okay, is actually outside that bracket. All right. So we are going to have two sets of information. We want to first determine the income that fits in that bracket, and then any additional income is going to be subjected to 2% charge. All right. So from our initial computations, we determined that the income was 72,000. Right. The income was 72,000, as you can see here. Okay, 72,800. All right. So the NIC, sorry. So the NIC, let me say class one. We are going to first deduct 50. Sorry, this one now is a bit troublesome because I need the tables information. Okay, I need the tables information. So I think it's very, very prudent. We just take the total figure of income. Let us just take the total figure of income, which we need, that's 72,800, and then just do the computations on this screen. So we know that the total figure of cash benefits this employee received was 72,800. All right. So what we need is to segment the information, right? Because there's a first level of income that is going to be subjected to 8% NIC. So we're going to say the first level, we're going to say 50,270 minus 12,570. Why are we deducting the 12,000? We are simply saying this 12,000 has to be removed because the taxman or the regulator said that the first 12,000 has got a 0% charge. So we are going to remove that one from the first 50,000 of DOM's income. The first 50,000 minus the 12,500 has to be subjected to, we need to multiply by 8%. Okay, we multiply by 8%. So what we get, if we multiply by 8% of to that difference, that's 50,270 minus 12,570. We get 37,700 multiplied by 8%. So that's 3,016 pounds. So that's the first level. What about the additional level? Remember, the total is 72,800. That's the total, 72,800. So the balancing figure, here we determined that the difference was 37,700. Okay, that's the difference between 50,270 and 125, 12,570. So the difference is 37,700. And somebody, a clever student, should have seen that, oh, that's the basic tax rate. The basic um, taxpayer rate band or rate. Okay, so that's the basic rate. So the remainder should be a higher rate. Okay, the remainder is on the higher rate, but here in this context it's not necessary, but out of interest just have to have figured out that, oh, that's what it's going, these things are interlinked and so forth. Okay, so because these contributions are for social security, you will discover that the lower income earners are the people who would want much of the public services or much of the government's help as they retire, as they get old. This is why the lower tax band or the basic tax rate, the basic tax band is charged a higher NIC percentage. Why? Because that level of income earners is more problematic when it comes to the consumption of public services. So they need, as they retire, they would need much of these social contributions, these pensions for them to survive. So we charge them higher. So the lower income earners are charged the higher of these things, of these contributions. So we are charging them 8%. Then any additional income is going to be charged 2%. So the additional income there is the difference between what? Okay, it is very important to always know where you are going. All right, so we are taxing this figure, right? We are taxing this amount. So we have already taken care of the first 50,270,000 pounds. Okay, 50,270 pounds have been taken care of. So we are now left with the difference between 72,800 and 50,270. This is the difference we want to tax now. Okay, do not be confused by this. That one only applied with the 8% charge. But the extra now, because the taxman has said 50,271 and above per year has to be taxed at 2% in terms of NIC's contributions. So the extra above 50,270, the extra has to be charged 2%. Okay, so the extra there, the difference was 72,800 minus 50,270. So the extra is 22,530. Okay, that's the extra, and we are going to charge this at 2%. Right? So So it becomes 451. 451. Okay. Sometimes you round up because you just need to be precise. 451 plus 3016. So the total NIC contribution, class 1 NIC contribution should be 3451. Okay. So which information should I show to the examiner? All right, to the examiners, this total here is not important. Sometimes it might end up confusing you, okay? But you just have to show that you made two separate computations. Two separate workings for the first bracket, okay, in line with this, where you charged 8%, and then the other line for the additional income above 50,270. So that's when you charge 2%. Okay, so we have attempted the part B of the question. Now let us move to the last part, where we are required to make a comment on so those 2 marks were actually easy to get. Then there's a 1 marker which you need to pass again, because this one requires your understanding of the tax theory. So state which payee form Abacus Limited will have provided to Dom when his employment with the company ceased, and what Dom will have been required to do with this form. So there are two things. All right, what type of form did the company, the former employer, give to Dom, and what did Dom do with the form? So there are main forms which you need to understand. Okay, the main forms. There is P11D. There's P11D. All right, P11D details the benefits given to the employee. Okay, the company will state those benefits so that the HMRC see how much were you given in terms of those other benefits, or all the benefits you were given, which were given to you, right? And then we've got P45. The P45 is actually the payee form that is given upon cessation of employment. Okay, they give you that form, all right, and it contains some information, and it's up to you to tell the examiner what information it is. But that's why I'm here. Okay, so we talked of the P11D, okay, and we said that this one details the benefits, usually non-tax, non-cash benefits, company cars, fuel benefits, private medical assistance or contributions, all those things. So they are reported on Form P11D. But for P45, this one is given when you leave employment. It details how much tax you have paid, in what tax bracket were you, so that the new employer will know how to tax you, right? Or which appropriate tax code do you belong to, something like that. So the new employers would need that form for them to know how to tax you. All right. So in answering this question, okay, you were supposed to have pinpointed that it is P45, Form P45. It's a payee form, Form P45. All right, it is given upon termination, cessation of employment, and then it is submitted to the new employer so that they know how to tax DOE. So you should have taken it to the new employer, to his new employer, right? And you get your 1 mark. There is also another form. There's P60. It's also a payee form. This one is given to employees at the end of the year. End of the year, for them to know or to get a summary of how much deductions and how much benefits did they enjoy. All right, how much deductions were done and how much benefits had accrued to them for tax purposes. So all this information, the employees should get this and file them for their own benefit tomorrow. You know, the taxman might knock at your door and say, hey, you've got some taxes due, and you just have to produce some evidence so that you, you know, avoid unnecessary confrontations with the taxman. Okay, that's for this question, ladies and gentlemen, and let us be together in the next question, where we would also do something about income tax computations. Until next time, ladies and gentlemen, please continue to feel excited. I mean, very, very excited. I am signing out. Thank you.